Jai Shri Krishna, Jai Shri Ram, Hari Om, Om Namah Shivaya. Sat Sri Akal, praise the Lord, and Assalamu Alaikum. So today I would like to tell you about the stock market and how it's going to crash. This video that I'm making today wasn't actually present in the 3-hour video, the previous one. And I'm adding it on as we have seen a few remarkable changes and I've done a little more research on this topic. So, stock market crashes are anticipated in the next few years. I mean, not in the next few years, in the next few months or in the next year. 2018 or 2019 is what I believe, because I've done quite a bit research on this topic about the stock market, and according to me, I think it's going to crash badly. 2018 or 2019 will be a stock market crash. It is a big internet topic, everybody wants to talk about that, and it's a hot debate on every single social media place, and we don't see it on TV, by the way, but we are seeing it here and there on internet. But actually most of the websites that you see will not have the entire information. So to just collect all the entire information is a thing that we all should try. And now we are going to talk about the stock market and how it is going to crash in the next few months, and how the stock market people, the bear controllers and the evil international bankers are going to make a big crash in India, and I have lots of proof for Indian BSE, Sensex and Nifty 50 crash. So there are a few ways to guess. One thing is CAPE ratio. You compare prices of various materials which control the market: petrol, gold, diesel, silver, rupee, USD to INR. These are the things that we are supposed to compare the prices of each one of them. And then superimposing information. Like when you superimpose a few charts of each other, then you will get to know that when one thing falls, the other thing also follows and falls. Then you know which one might fall first. So that's kind of a predictive analysis. So if you're able to superimpose information or superimpose charts, then you'll be able to know how gold, NYSE, BSE, NSE and NASDAQ function all together in different ways. Some things are for each other and some things are against each other. And the most important reason is political instability. So generally when a stock market results, there will be some political instability. This kind of thing happens in every single stock market crash. There are different cases of political instability. Right now, political instability is in the form of US-North Korea problems, US-China problems, US trade wars with Europe and the European Union. And these problems are all contributing to political and economical instability, socio-political crisis. And then we see, considering relations of other economic components. So what are other economic components? They are USD to INR and USD to GBP and USD to Kuwaiti dinar, KWD, and all of these things are very important when you check out what is happening in the world. Gold prices, silver prices, copper prices, and not copper but NYSE, NASDAQ, and all of these things must be checked. Then volatility and the PE ratio, the price versus expense ratio, that is also very important, because some companies just overvalue their stocks by increasing the PE ratio, and right now the PE ratio is very high. So we'll see what that can do to our stock market. And scams, of course, scams make a huge problem in the stock market. So if I would give you an example of scams in the previous past, Ketan Parekh scam, Harshad Mehta scam, and all of these scams, Satyam IT company scams, all of these things are big scams, and because of this we have had huge problems, and the bear market falls and the bull market crashes and all of these things happen. And US T-bills, where the US Treasury bills yield increases, then it's a problem for the stock market. They give pressure to the economy. And 2015 was when stock market fell. BSE Sensex fell by 1,624.51 points. So let's just analyze how it happened. It's very simple to analyze how the stock market crashes. when you consider other prices of other various materials and other metals and other stocks and other stock trading indexes, and of course Nikkei and all of those big stock indexes, Nikkei 250 of Japan, it's very important to consider all of these things before we make an assumption that gold and rupee are like gold and the rupee go against each other, stocks and gold go against each other. That means when stocks go up, golds go down. The price of golds go down. Gold grams, they all go down. And people who buy gold, they make losses when more people buy stock. So it's generally based on this supply, demand and majority game. And then 2015, the highest stock points were 33,000 points. It was the first time the stock market crossed 33,000 points, and the rupee did very well at that time. Why? Because when the Indian stock market goes high, the rupee does well. That means investors control the rate of the rupee.
Can you show where you are?
Yeah. So when the stock market goes yearly high, what it did in 2015, March to July, it crossed 33,000 points. And rupee did very well. The rupee did very well. That means investors drive the rupee high when they start investing in the stock market even more. And the yearly low was 24th August 2015 when the stock market crashed by 1,624 points. That is the highest in history. And gold did bad and the stocks were good. When stocks were 33,000 points, March to July, gold did very bad. It was a loss year for gold. And when the stock market went too low, like 1,624 points, gold pushed the recovery gear. That means it started becoming fine. And the NYSE fell by more than 650 points in 2015 March. The USD index was very good because other currencies are going bad. That shows that the USD index actually is based on more than 57% the European Union. So now we know that when the NYSE goes high, the rupee goes high, Indian BSE goes high, and all those kinds of markets goes high. They all go high, and then we have this gold coming down, badly down, and then some people ask, why did the whole year become a problem? Why did it not come back? Just push the recovery gear and come very fast back? Because people lost faith in the whole market, including gold, because it had gone low for 7 months and then it had to go high or there was a big problem. And this was 24th August, about the end of August. So people lost faith in gold too, and that's why gold prices did increase. And 2008 was when the world's biggest recession took place. So let us analyze the condition of global economy at that time. Nifty did very bad, Sensex did very bad, went down by 1,408 points, the second in India's major BSE Sensex fall record, and all stock markets did badly in the whole world. In fact, Lehman Brothers failed, Bear Stearns failed, and Angelo Mazzillo and such big bankers, they created a boom market there and then they blasted it all. Gold in India was doing well at this time. It had increased 2,000 rupees since the last year. The last year, 2007, was having about 11,500 per 10 grams of gold. And then we had it only 12,000, and then it got hiked to 12,500 grams per gold. Gold per gram. Per 10 grams. And there was a 2,000 rupee hike. It was 10,500 in 2007, and then 2008 it became 12,500. That means when the whole market was collapsing by 2007 December and 2008 January, the gold market did very well because people regained faith in gold. NYSE and Nasdaq had a very bad condition at this time. No question of rupee because it was a global recession. There's no question of the gap of rupee and the dollar. Can you please show here, Abhigya? So right now we're running on a forex system. People are concentrating more on this gap. Dollar and the rupee, or dollar and the yuan, dollar and the yen, etc. They're actually not concentrating on the gap between the crown of the dollar and the collapse. So they're just looking at the gap between US and India, not looking between US and the fall or rupee and the fall. So how close are we to the fall? Even though this whole balloon crown is very close to the fall, but the US dollar and rupee are very far away from each other. How does it look? It looks like fun, but when it collapses, the whole market collapses. So if a bunch of balloons fall, we don't see which balloon fell first and which balloon fell the second into a fire pit. We see the whole loss of all the balloons fell. So we just don't know which one is going to go first. Right now, the USD index is very, very horrible, and the rupee is far from the USD index. So, for an example, here's the USD index, and here's the fall. So here's the rupee, and the gap between the rupee and the US dollar is increasing, but the gap between the USD INR connection and the global currency connection is falling down. So should we concentrate on the gap between USD and INR, or should we concentrate between the gap of USD and the great global economic recession? So we should be concentrating on the recession more than just looking at the standards of the rupee versus the dollar. It's like this. A bear is following two people and they are fighting for each other, and they know that the bear is going to eat them, but they are feeling that, okay, just till the bear comes, let's fight with each other. That's what is happening. USD and INR, USD and all the currencies, the US dollar and the Indian rupee, every single currency on planet Earth is fighting with each other just to gain more popularity or more, power and prestige. But they're not looking at how much they will cause, how much depression they will cause in the earth, in the global economic system. And then dot-com bubble. When the dot-com bubble came up, Ketan Parekh, who was a cheat and a scammer who learned it all from Harshad Mehta, he started increasing stocks by a method called circular trading. That means, for example, you have three friends and you want any particular stock to come up. So for example, you want you want ICICI stock to come up. So you and your friends decide that you're going to buy 10,000 of ICICI stocks and sell it to each other. So circular trader A buys 10,000 stocks, sells it to circular trader B. It becomes 20,000 stocks of sale. And then circular trader B sells it to circular trader C, and then that becomes 30,000. And then they again sell it 40,000, 50,000, 60,000, 70,000, 80,000, 90,000, and then when they go to lakhs of things, it looks like everybody is buying ICICI and the demand for it goes up and the price skyrockets. That's what Ketan Parekh did. So Abhigya, can please come and show it here. So the 2002 dot-com bubble was expanding, and at that time Ketan Parekh started increasing the stocks of K10 stocks. What are those K10 stocks? There were some global IT companies, etc., or very small IT companies who had their stocks were just 200 rupees or 300 rupees or 100 rupees, just like ICICI Bank is now 295 rupees was the price of ICICI stocks, is the price of ICICI stocks. And telecommunications and website businesses were peaking. So even very small telecommunication stocks peaked that high. They're getting very good money and their stocks are peaking, and then we had the dot-com bubble coming into picture. And because of that, gold went down. Since the season was protecting the price of gold, it didn't go too down, but gold went down by 100 rupees because the seasonal increase protected the gold price at that time. And this was the condition of 2000 to 2002. So let's make a small conclusion for this. We have seen three cases. The first case was 2015, the second case was based on 2008, and the third one based on 2002. Comparing all of these, we can easily say that gold does very bad when stocks do good. Stocks do extremely bad when gold does good. The rupee, the NYSE, the BSE, the NSE, all of these stocks collapse together. If the rupee if you see the dollar collapsing, you know the rupee is going to collapse next, because the trade between India and US will decrease and the export of India will decrease, because US is is India's highest importer. So that's why if the US economy goes down, the Indian economy will also follow. There is no use in saying that the US economy is fine, so the Indian economy will be better, or if the US economy is too good, the Indian economy will be too bad. It's not like that. If the US economy goes very good, then the imports from India will increase, or there might be some economical good things around when the US economy goes good. But when the Indian economy goes good and the US economy goes bad, you should predict that the Indian economy will also fall along with the US economy in the next couple of months. That's what is happening now. We have the US and China, India's largest importers, and also we have some other countries. They're all coming down. Europe is also one of India's largest importers. It is also coming down with the US and European trade war and the US-China trade war. That's why we can say, even though the rupee is quite low based on the dollar, still we can say that the rupee, the Indian economy, will also collapse along with the foreign economy, US economy. So now let us see Jan 2018 and what happened at this time. In Jan 2018, the NYSE was at its highest, NSE highest plus 11,000, BSE was plus 36,000 record level, and Dow Jones Industrial Average was at its highest without a 5% correction, just plus 24,650. Nasdaq was at its highest. Downtrend has not yet been seen. Downtrend means more than 5% correction. 5% correction means, for example, if you have 5% of the entire lot, that much goes down. That's a downtrend of 5%. But we have not seen a downtrend of 5%. We've just seen a little downtrend. And DJIA is now coming down, and already General Electrics, which resigned from Dow Jones Industrial Average, is saying that it has done good because of resigning from Dow. And because of seeing the markets, the General Electric CEO is saying that it was good for the company to come out of Dow. So what are we doing? We are having faith in the DJIA. How are we going to have faith in a particular stock index that is actually not going to do well in the future, according to big CEOs of big companies? They're happy at being removed from the Dow. So what's the future of the Dow? It's already starting a small downtrend, maybe a twin peak, again recovery, and then again fall. We just don't know what's going to happen to the Dow, but we're sure that the NSE and the BSE are going to collapse. We're sure that the NYSE is going to collapse. The DJIA is going to. The Nasdaq was at its highest, so high, in Jan 2018. It was a boom market in Jan 2018, and the PE ratios of almost all of these things was so high. And the highest PE ratio of Nifty was ever recorded in Jan 2018. This is what happened. And then the CAPE ratio was at its highest. Sorry, the camera had a little problem. It became a little dull. So let's begin again from the same place. So when the stocks did quite good at this time, gold went very low, 29,070, below 3,000 per gram at that time. And the USD bills were having a very high yield. The CAPE ratio was at its highest. The PE ratio was extremely high. That means every single stock, including the BSE and the NSE, were having such high PE ratios. They're being overvalued. They've gone to the bubble territory. Stock outlook. It was going to touch record levels. BSE and Nifty were already high. And right now we're having BSE and Nifty. If you should actually see the price of Nifty and BSE now, how many points they've gone up. Right now it was about 67 to 80 points down actually, and now it is recovered, and again it's 120 points. Just now it's a 120 point change, 0.34%. It's gone down by that much. And Infosys, Hindustan Unilever Limited, Sun Pharma, Kotak Mahindra and Vedanta, all of these are Vedanta, my goodness, what a name. 116 points. Right now I think it's going to crash. Is it going to crash? Not exactly. Maybe if it's going to crash, it has to go above 3,600 points, or it might even crash just now, but the crash is generally expected. And gold price is growing right now. So if I should show you the gold price right now. So here is it. The gold price is growing very well in India right now because people are trying to guess that the stocks are going bad. All the big international bankers are doing very, very well with gold. They're buying too much gold. So let me show you the stock rate. The gold rate in Mysore. So here is it. It's gone up by 2 rupees. That means that the gold price is increasing in India here. And if I should show you the gold price in the US, so then dollar is as unstable as the US. Dollar is actually unstable right now because US is fighting with the European Union and with China. I've written China here. It's China, and the trade wars have already begun. So once the US dollar index, USD index falls, the rupee will be affected next. And we have already seen a twin peak. What's a twin peak? It is like this. Jan 2018, it went so high, 36,000, and then it fell down below 34,000, and then it again came back climbing up, and we never know how much it's going to climb. If it climbs above 36,200 or 100 points, there's going to be a boom and then a large bust. The Nifty, if it climbs above 11,100 points, there's going to be a bad fall and bad crash. It's going to be a crash, it's not going to be a correction. And it's only falling by a few 60 points now and then. Right now we saw a 116 point crash. So if Nifty goes higher than 11,100 points, it's quite safe. But till then, it's a safe. Actually, if it goes higher than 11,100 points, it's very dangerous. But right now, it's quite safe. Till it goes till there. I've written wrong here, but till it goes till 11,100 points, it's fine. But when it reaches there, it's going to be a big bubble, and now it's going to immediately crash. Petrol prices will start flying, and it's going to be a dangerous bubble territory next. When will it blast is the question. Here's the pin held by the bear controllers, the Illuminatis, and the international bankers. When they will blast this bubble is what we have to see. We've already seen the repeal of Dodd-Frank regulations. The Federal Reserve has already highlighted its crash, what it's saying about the crash. So you can see my video about the Federal Reserve and how it is already hinting that there is going to be a stock market crash, an inevitable stock market crash. And then till now recovery has been seen and the stocks are flying high. And of course, trade wars have begun, which is going to suck down the stock market and pull it down till it falls. All of these things are going to happen. Gold price was falling in the past, but now it's growing back. That means that the stock market is going to fall. When you see the gold is growing, gold market is growing, the stock will fall. That's for sure. And we've seen the rupee index. The rupee index is growing very well. It is moving away from the dollar. But the USD index is going down. That means next, after a few months, the rupee index will go down. We saw how the rupee went down along with the stock markets of India. So whenever you see the stock market is going down, anticipate the rupee is also going to go down against the US dollar. Now we have a standard of measuring the rupee by the US dollar. But we should also start measuring the standard of a particular currency by how much it can buy you. In the past, a rupee could buy you more things than it can buy you now. Right now in Venezuela, if I should show you a case of hyperinflation which I'm talking about, you have to pay 36,000 bolivars to buy your food, and there is not that much paper to print so much. So they're starting to release so much more bolivar notes. They're starting to release 10,000 bolivar notes, starting to release, and there are some countries like Zimbabwe which have released $1 trillion notes, $100 trillion, $10 trillion, which are actually as useful as just $2. Such things are examples for hyperinflation, and that's what is happening. Abhigya, can you please show here? And negative signs here are the rupee is falling down, NYSE is falling down, gold prices are increasing, Nasdaq is falling slowly, petrol prices are increasing. Right now there's been a small talk which has temporarily increased the crude oil prices, which have decreased the petroleum prices in India very little. That does not even matter, but petroleum prices are increasing. The US and European Union and Chinese trade is also increasing at a harsh rate. And we also have, this is going to be the final crash. There is no other way. I can actually say that it's going to be the final crash because it's such a heavy crash and it's the highest the stock market has ever witnessed. All stock markets are in the highest PE ratios, and all stock markets are really powerful right now. Already we have seen the Nikkei is also falling down. Japanese Nikkei is falling down. As all the stock markets are slowly falling down, we should be expecting a big stock market crash coming. And of course, we have the social public, which is continuously being distracted by football. The FIFA World Cup is coming at the same time. Just to distract people, the big bankers put entertainment around when stock market crashes and big problems are expected. That's why they've given the TV, and companies like Jio have made people so dumb that they sit only with the Jio TV app and keep seeing only that, according to a research by the Merrill Lynch Bank of America, which had made a research on why Jio is having its stock higher. It said that Jio TV is one of the apps which is giving people, that means people are seeing only this kind of TV stuff and Netflix and all of those things, and Netflix has a very high PE ratio. That means all stocks are having very high PE ratios. People are also getting distracted by Facebook, Google, Twitter, WhatsApp, and the FIFA World Cup, of course. These keep you distracted for the final collapse. And my dear friends, awaken, because the final severe global recession is already being warned by big central banks like the Federal Reserve, and big problems are happening. The Dodd-Frank regulations have been repealed, which is going to be one of the major factors for the next stock market crash. So my dear friends, please start investing in gold and other things to keep your family and yourself safe. Please buy cows and bulls because they are the prosperity of the country, and their prices never decline. Even if you see economically, you can always be self-sustainable when you have them. Please buy land also, because when you buy land, you're utmost self-sustainable. Do not invest in stocks at all. We never know when it's going to fall. You just saw how it was just 47 when I showed you, and it turned 120 points down in a second. So you never know. It's unpredictable. It's just like a bull. Bulls, you never know their tendencies, except Vishnu, our bull. You know how he'll be, but it's just like a bull, unpredictable tendencies. Just joking. So that's how it is happening. And there's going to be a severe global recession, my dear friends. So please be careful and warn your other friends about it, and spread this message around as soon as you can. And also do your own research, because I'm not imposing only my information on top of you and what I am trying to say. It's just an add-on to what you might think. So you should do your own research and then think about it, what's going to happen. Do you really think this is going to be a stock market crash or not? I've actually provided you with all the information. And of course, there is no political stability right now. US, China, Russia, the European Union, India, Pakistan, everybody's fighting wars. So we actually do not know what's going to happen. So most probably there's going to be a stock market crash, of course, in 2019. Because one more thing, Abhigya, can you please show it here?
Yeah, Priya.
Signs of a bubble. It's very important. There's already a stock market bubble in Jan 2018. There's a biogas bubble now. Uber and Gale Gas are trying to promote CNG gas. Gale Gas is an Indian company which is promoting CNG gas. And we have a big Indian project of worth 15 crore rupees. And it's about waste to energy projects. And we never know when this biogas bubble is going to be a major reason for the crash. And the PMAY is Pradhan Mantri Awas Yojana is creating a home bubble. That means they are targeting at 11 million homes by fiscal year 2022. And of course, every bubble bursts. ICICI and HDFC are becoming bubble markets. But right now, a so-called whistleblower has brought down the stock of ICICI. So they aim at making HDFC the world's biggest stock and India's biggest stock. And HDFC is going to be the best stock in India for just a few more days or hours. Nobody knows. This is going to get bubble. And ICICI is also turning into a bubble market. And if you want more information about the stock market and the bubbles, etc., of the ICICI market, the stock market of ICICI, and there's one more big scam coming up. It's MD Mallya scam, Rotomax pen scams. So Rotomax was a company. It's a pen company which is well known in India. It's a pen company, and the main person of that pen company, I just don't know this director, managing director, CEO, Vikram Kothari, actually made a huge scam of more than 3,000 crores. It's swelling up day by day, and the CBI has also brought MD Mallya, who was an important officer at the Bank of Baroda, which gave 432 crores to the Rotomax company, pen company. So it is very big and was very heavily involved in this. So MD Mallya, who was an important officer there, who was very influential to give the 432 crore loan to Rotomax Pens Global, actually was the cause of the scam. And now, slowly shifting from Bank of Baroda, this MD Mallya has come and sat as the ICICI director. Just see what they've done. And if you want to know more information about this, I have provided some links in the description box below, and also made another video on ICICI and HDFC, home loans and the new home bubble. So thank you. Jai Shri Krishna, Jai Shri Ram, Om Namah Shivaya, Harihi Om, Sat Sri Akal, praise the Lord, and Assalamu Alaikum.